Welcome back to Primary Source China Investment. We're on show X, so we thought it'd be interesting to go back and visit show O, because on show O, if you recall, we talked about some of those names that are banned from US investors investing in Chinese stocks. That was from Executive Order 14032. And at that time, there were 59 names on that executive order. And we wanted to go and look at the specific names where in the CSI 300, if you remember. That's the major market index, and that's traded as ASHR. At that time, we spoke to the portfolio manager of ASHR, and his point was, look, these names are going to get out. We're going to be in compliance. That's absolutely no problem. So this week we ran back and checked, and it turns out they did pull those names out. So those names are no longer in the ASHR. And some of the names that we've talked about in the past in terms of investing in the US or going public in the US, remember there's 236 companies that are Chinese companies listed in the US. So what's happening with those? We've talked about that over time, and we're seeing this reverse path back to Hong Kong or back to Shanghai. Look at China Mobile, China Telecom, China Unicom, CNOOC. You also have about 16 of the largest names that have dual listings already or shadow listing in Hong Kong. I'm talking about Alibaba, JD or Jingdong, Bilibili. All of these are listed in Hong Kong as well. And we're talking a not insignificant sum of money, about 1.5 trillion US dollar equivalent in these 236 names. So, you know, history doesn't repeat, and sometimes people say it rhymes, but in the first wave of Chinese companies listed in the US, there was a washout of about 40 billion US dollars. And before everybody goes out to sell all their Chinese stocks, we wanted to point out that Chinese stocks listed in the US have risen tenfold since that first wipeout. And a lot of that was through SPACs and some squirrely structures. But what we're saying is these kind of dislocations in the market, regulatory risks happen. How do we navigate that? And that's what we wanted to get into today.
That's right. It's no doubt China government, the US government have the significant influence on the capital market. Whatever regulation implement, they always affect the market, add the extra volatility. I think from the investor perspective, is still think about how to evaluate those companies. The companies probably in the US market and also listed in the Asia market. I think right now people still focus on the valuation logic. From my perspective, I probably think the three most important things. I think number one is how the future cash flow get affected by the government or regulation. Mm-hmm. I mean, it's not just by the China government. I think it's also affected by the US government. So investors probably have the different opinion or give the different discount for those valuations. Mm. So if future cash flow is unstable and also it's vulnerable, not consistent with the China long-term or mid-term interest, or maybe not also consistent with the US long-term interest, that will get affected. Most important things, you set up the goal, you should set up the path, and you should examine the performance. That is the most important. If something do the wrong path or wrong goal, that should take the consequence.
Generally speaking, what we're looking at is from the investment perspective. And I always put myself in the situation where if I have to allocate to China, what do I do now? What have I learned now? What's different now? So we're constantly updating our information set, and things have changed. There's no doubt about it. And we don't want to minimize that, but things constantly change. So there's been a lot of dislocations in the past, and things have generally come back. That doesn't mean that there's not volatility in the interim. So I think the short question is, great, Gerard and peng.guo, but what do I do now? And I think we keep going back to the same thesis. There is A-share exposure that we would prefer over US listed Chinese stocks, and that means ASHR. And what we've been saying for a long time is put an overlay on top of that to capture upside and limit downside, or simply buy a chunk of fixed income with that. And again, through that CBON. It's not difficult. If you want to take a lot more risk, there are plenty of ways to do that, but we don't recommend doing that.
I think right now is really like the turning point period. I think Morgan Stanley recently released the articles. I have the deep research for the China market. I think it's really like the re-exam the fundamental investment logic and understand the big change in the China, understand the logic and the assumption, recheck it. So it's really review entire the investment the logic as well as the model. And for the short term, it still should be invested into the uptrend, but to keep eyes on the Asia market when they can enter into the uptrend. As long as they get it, as well as the even the investment logic also works well. And probably even like for example, if next month US and China they agree, okay, we temporarily stop the trade war. That's probably boom the market pretty soon. So something like that is also have the significant impact on the market.
Yeah, but nobody's forecasting that.
Exactly. That is very hard to forecast. Right. But that's why we have to pay attention to when the market into the uptrend. And also, some of the things is really try to find out what kind of the sector have the long-term futures. So which is consistent with China national interest and also with the US interest, and also get the support for the capital market. So that is very important. As well as in the short term, those kind of the sectors could attract the market attention and get the capital inflows into those markets. So that should be the like the celebrities in the capital market.
Yeah, that's actually a great segue into our policy section. So let's get into that right now. So we woke up this morning and Xi Jinping was trending on Twitter. And generally speaking, when you're trending on Twitter, it's not for something great. So this is more about the education. And so now I guess the students, the elementary school students in Shanghai no longer have to take English, for example. So that was more follow on to this tutoring and the interests of the CCP versus the interests of the people and the companies. And we wanted to get into a little bit of that nuance today. What are the objectives of the CCP? Xi Jinping has laid out the objectives, and it's pretty clear. So you need to invest alongside with those objectives if you want to stay above water. And the first is the health of the people. This should be carried out by public hospitals. So what does that mean? Private healthcare is probably at risk. The second priority is fighting floods and securing the property. Homegrown industrial names will probably benefit. And the third is this technology that we keep talking about. And I read a nice piece that said technology is separated into two areas. One is nice to have versus need to have. So Xi Jinping thinks the country needs to have state-of-the-art semiconductors, electric car batteries, commercial aircraft, telecommunications equipment to retain China's manufacturing prowess, avoid deindustrialization, and achieve autonomy from foreign suppliers. So that's probably where you need to focus your money. There are other areas such as social media, such as posting pictures, such as opportunities for individuals to get fantastically rich that are less of a priority for the CCP. So it's important to make sure you're aligned with the policy, which is what we were talking about in the previous segment.
I like you mentioned the 2 points, need to have or nice to have. That's exactly explain the current situation. I think especially in the hardship situation, people really focus on need to have rather than nice to have. Mm-hmm. So we just talk about the valuation, about the cash flow and how to give the discount on that. You are right. And also, right now, it's really needed to have. So in this phase, it's really need to find out which sectors have the long-term growth potential that really means that this country need to have in the long run.
Correct.
So and also the path is pretty important. So that's a lot of the details on the way could affect or distract or maybe go to the wrong way to do it.
Yeah.
Even like the education, healthcare, doesn't necessarily mean the government policy works over the night. It really means the capital market will adjust it by this goal and
absolutely
long-term ways to match the different stakeholders.
Yeah, investors will react quickly. There's no doubt about it. The other thing on the policy side is the CCP has been very, very cautious about creating this oligarch class as what happened in Russia in the 90s. So there is definitely a strategy and a philosophy to avoid that kind of wealth accumulation by very, very few. And I do think that that does undermine some of the thinking that's going on with these tech companies, because people have lived without WeChat for many, many years. And I think that's sort of not a need to have, but a nice to have.
Yeah, that's really back to the fundamental goals of this country. I think even before the Republic of China was set up, most of the people's goal is still the get rich together, rather than a few people's get rich.
Yeah,
I think right now the reality is a few companies, a few people get super rich. And that is not reach the common prosperity. The question is how to get to that. It's many different ways. I think it's similar like the United States. Should we add the tax or should we cut the tax? So it's a debate about it.
Yeah, we have a funny thing here
right
too.
Answer.
Yeah, we have a funny thing here. We love to root for an underdog, and then when the underdog is the super dog, we like to tear down the super dog. It's a very peculiar way. We love Mark Zuckerberg until Mark Zuckerberg gets all too powerful, and then everybody hates Mark Zuckerberg. I mean, this is a pattern that repeats itself here in the U.S. all the time.
Yeah, for the policy, another two very important things need to pay attention. One is the interest rate. So right now and the secondly is really the leverage. So in the China market, the financial leverage for the enterprise, people have to pay a lot of attention on that. And also like the future cash flow prediction, interest rate and the leverage, they tie together. Like if the lower interest rate, the leverage will be high, and the future cash flow prediction looks like very reliable. However, if the interest rate are getting up, both will get worse.
Yeah, they're actually the investment banks are calling for 2 RRR cuts. There's already one cut in April, and now the forecast is for 2 more before the end of the year.
That's exactly right.
Yeah, so we'll watch that, and we'll wrap it up for Show X. Thanks for tuning in. Please hit the subscribe button. Looks like we have a solution for what happens after Show Z. Thanks, Molly. And we appreciate you all tuning in. We'll see you next week. Thanks.
Thank you.